Ladies and gentlemen, welcome to the Market Pulse edition of The Scoop. I'm your host, Frank Chaparro, editor-at-large at The Block, and joining us today on The Scoop is our guest, Loomdart, a founding member of the anonymous crypto investment group, eGirl Capital, as well as Larry Cermak, VP of Research at The Block. Before we dive into today's program, I'd like to take a moment to thank our sponsors.
Wobi, one of the world's leading virtual asset exchanges, has been providing convenient and professional virtual asset management services to more than 50 million users in more than 160 countries for nearly a decade. At Wobi, their mission is to make crypto accessible, to help you understand risks and make informed decisions to protect you and your assets. Learn more today at wobi.com. This episode is also brought to you by Ledn. From Bitcoin and USDC savings accounts to Bitcoin-backed loans, Ledn's financial services enable you to benefit from your holdings today without selling your Bitcoin. Learn more about Ledn at ledn.io. Ledn, where your digital assets come to life. All opinions expressed by hosts and podcast guests are solely their own opinions and not necessarily those of The Blocks. Podcast guests may have taken positions in the assets or other matters discussed in this podcast. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions. For full terms, visit theblock.co/terms-service. Once again, we have Larry Cermak and Loomdart coming on the show. I think their first time together, although they've both been on quite a bit. Loomdart had his historic appearance at the end of last year when was it? I forget, actually.
That was, I'd say we're talking market Pico top. Like Pico top.
I just can't believe it's December already. That's why I'm a bit shaken by that fact. So now we're not in Pico top. The market's been gripped by this, not only the bear market, but the calamity that is the fallout of FTX. We had Sam on just a few days ago. That was quite the endeavor. Maybe we can reflect on the interview real quick with Larry. Loom hasn't had a chance to listen to it. What do you think the biggest takeaway was?
Yeah, he's basically still kind of repeating the same story as we've heard across different podcasts. But in the one that you did, I think he went a little bit more into detail, and you were, I think, one of the few people that actually pressed him on the tougher questions. I think we got a little bit more clarity about what he was saying about the margin. We also got a little bit more clarity about the stub accounts, as he calls them, for fiat, as they commingle with Alameda. And we got a little bit more, I think, insight into kind of how Sam is thinking about stuff these days. And also, obviously, the jurisdiction battle that might come when it comes to the bankruptcy case. I think overall it was the most comprehensive interview that was there, and definitely recommend people go check it out. It's long, but it's good.
I've been getting outpouring of support, but also tips, which has been interesting. I've talked with a few sources who kind of walked me through some of the more egregious lies or misrepresentations during the course of the show. So I think there's a good follow-up piece to be had there. I mean, there's a lot of different things we can talk about. You mentioned the bankruptcy element of it and how it will shake out from a jurisdiction perspective. I don't want to put words in your mouth, but as a creditor and someone living abroad, is this the most important thing for you guys? I know that you both had some funds on FTX.
Unfortunately.
What's keeping you sane in these trying times?
I mean, the kind of one big thing I've realized is that, no matter how badly I have been hit by this, I'm still here. I still have enough money for food and water for a good few years. In terms of full-on damage, but I'm getting my health back as I've gained quite a few pounds the last few years, but having to cut down on food because Sam took all my money is helping. But just it, I don't want to say it could always be worse, because I don't think that's a good way to just think about life in general. But in terms of how bad it really could have been, I think I personally am fine. I have a lot of friends who are in kind of positions where they are ruined in terms of stuff they owe to other people that through no fault of their own is like they're screwed now, and like businesses are failing not because of kind of any greed where it's like, hey, they put their money into Luna to like get some free money, but like just, you know, having funds on exchange like cost them everything, which is like kind of horrendous.
Yeah, one question I have for you, Loom, and I've been kind of like going back and forth about this myself. Like, what was your mentality for actually not withdrawing the money? Because I think both of us knew that, like, you know, it's the logical thing to do, despite the chance, at least back then, from my perspective, being very low that something like this could happen. You know, I ended up basically, you know, not withdrawing, basically because I was lazy. I was probably too cocky. But how is someone like you thinking about that when you have a huge amount of your net worth on FTX, and how are you thinking about it now?
Yeah, it's honestly a tough question to answer because in hindsight, any reasoning that I would have is just like ludicrous and just makes me seem like feel incredibly stupid. But I think my main mistake was I really didn't look deep enough into kind of understanding the CoinDesk article. And those weeks were like incredibly busy for me in terms of things I kind of had to do. So I only really started paying attention to this when a few friends were like, hey, Loom, it's like time to start withdrawing. And that was unfortunately when they had started the withdrawal caps. And it was just frankly too late at that point.
Yeah. Yeah, I think... yeah, I was in a similar boat. I mean, the CoinDesk article seemed like relatively incomplete at the time, at least to me. And then when I started taking it really seriously was when the CZ back and forth started. But yeah, you know, unfortunately, didn't go well for either one of us.
What was the moment? Like, it's nice to reflect just because it's fun, but also I think interesting as well. When was the moment when we all realized that it was just, okay, this firm has a lot of issues with its balance sheet, to, okay, this could be criminal or illegal behavior? What was that first sort of indication?
So for me, when I really knew I was in trouble was when Binance announced the acquisition, or when they tweeted out that announcement. Like, because, you know, knowing a little bit about kind of how Sam ran the exchange and his mentality, you know, he would never ever do that unless there was something terribly wrong, unless they owed a lot of money. And so that's when I realized I'm probably never going to see that money again, or if I'm going to see some of it, it's going to be very little. And it's going to take like 5 years. And then, like, it seems like ever since that announcement, every day it started getting a bit worse. Like, every day was a bit worse. You find out that, you know, it's not actually 2 billion like I initially thought, but then it ends up being 4 billion. Then it was 6 billion. It was 8 billion. And you keep hearing these things, right? Like from like private groups, from chats, from people on Twitter. You keep hearing, you know, oh, Sam actually bought stocks. Like, oh, you know, it was a huge loan to Alameda, and for a few days you didn't really know what to believe, because it was just, at least to me, it was so unbelievable that this would happen that almost like you have to get used to the fact that this actually did happen, and what the implications will be. But I think like probably 2-3 days after the announcement, it started becoming quite obvious that there was something terribly, terribly wrong. What really annoyed me the most, honestly, is that like a lot of the employees at FTX, or, you know, a lot of my friends who work there, work with Sam day to day, and then they had no idea about this. And you know, those were some people that I relied on with some information as well. Like, I would assume that if there was something wrong, you know, at least those people would know, but it turns out they just didn't. And then when I realized that, then, you know, it was kind of just getting used to the fact that I'm never going to see that money again.
Well, what? Okay, but what about the cope? We just got some fresh cope off the presses, and by presses I mean from Wazzy Lawyer.
Oh, bless him. He's keeping us going. I guess you're referring to the kind of effective jurisdictional battle stuff going on between like the US and the Bahamas. It's an interesting point to where obviously if the Bahamas can kind of wrestle the bankruptcy out of the US courts, it does get a lot friendlier in terms of the overall jurisdiction dealing with this is one that, I mean, like, people seem to forget that, like, yeah, obviously Sam was very beneficial to the Bahamas in terms of like his many investments and developments there, but also like they took him in. This is incredibly embarrassing for them as a jurisdiction. I mean, when the oh god, I don't think he was the Attorney General, but do you remember like a Bahamian lawyer had like a press release, and the entire thing was just him continuously going like, we were here, we stopped their stuff first, we like in terms of face, this is horrendous for the Bahamas. So they have a very big reason to like try and make this right somehow. Whereas for the US, this is much more of kind of, okay, this is like crypto fraudsters gone wrong. There's like, they kind of view, like, I don't want to say they view the creditors, basically people who lost money in FTX, as like people who like lost money taking part in a Ponzi. But I just feel like overall a US kind of battle for this, like a bankruptcy, would be much more like, all right, we need to like kind of punish these people, and like, you know, these kids misbehaved and took part in something that was silly, rather than like, we need to kind of make this right by them and see how like best we can go through this.
But why is it better for users? Like, why would it be better for you two?
I guess actually, Larry, do you want to take this one?
Yeah, I mean, I can kind of say, and keep in mind, this is very much some serious scope. Like the probability
this is
of this.
pure speculation. This is like when you have a lot of money on FTX, and like, honestly, I mean, look, guys, if you the unfortunate truth is, if you did have a large amount of capital on FTX, mentally, it's just best to write it off as zero. Any bonus, any money coming in, unfortunately, like, just for your own sake, just assume that, like, that money isn't going to be coming in. And if there is, even if there is some plan or whatever, it's going to take a very long time. I think just for, like, everyone's kind of mental health.
Yeah, that's exactly right. I mean, effectively, I think both Loom and I are treating the amount that we had there as zero, and then it will take years. But I think, kind of to summarize some of the reasoning why it could be better in this like super hypothetical cope scenario, is that, first of all, Bahamas is, you know, it's a small, relatively small jurisdiction where, in terms of like bureaucracy and in terms of how long things will take, I would bet that it would be a little bit faster than dealing with the U.S. liquidators, so the liquidation process. Also, it's very apparent that Sam has, you know, control over how the process is going. Like, I think from the last like 2-3 weeks, it's become very clear that Sam still has connections in the Bahamas, and the government is still standing by him. And I think it goes back to the argument that Loom was making. I mean, he just made them look terrible. So they kind of have to go in this direction. And then, you know, if this process goes a little bit faster, there is a chance that someone else, you know, he, for example, I don't know if it's Sam or someone else, but someone can buy the assets and buy the brand, buy the exchange, and then somehow, you know, for example, offer people to be bought out for the amount that they would be owed at that time based on how many assets they have. So let's say it would be, you know, 10 cents on the dollar or something immediately, but then you can get something like some debt token or something, and the exchange could be restarted, like something similar as we saw with Bitfinex back in the day when they were hacked for a lot of money. You know, that's a path that could potentially be taken. But yeah, I mean, this will be a long battle, and I am pretty sure that the Bahamas will try to challenge the jurisdictions of the U.S., especially for FTX International, because it's hard to make the argument that this kind of belongs to the, you know, U.S. Bankruptcy case, because there were no U.S. customers and it was a purely non-U.S. exchange. And I think, you know, it will end up being separated, and then it will depend if this battle from the Bahamas can be won, and then if there are any investors still with appetite to actually buy out some of these assets or even the exchange altogether. But like I said, the probability of this is incredibly low. I just think that like the prospect of, you know, the other side, which is the U.S. liquidators and the U.S. bankruptcy case, they have no desire whatsoever to revive the exchange. They have no desire whatsoever to do this as fast as possible, in my opinion. It will take years, and it will drag on for a really long time. That's at least kind of how I'm thinking about it. I would much rather have the option to, take out the money now versus wait 5 years and get slightly more, because the cost of capital, at least for me, like in this case, it's much better to get it now versus a lot later. I don't know if Loom agrees with this. Yeah.
I mean, I think just the option is like something that's fundamentally very valuable. But again, like there's like guys, this is tremendous hyper gigacope. Like this is like sub 0.1% or whatever. Because I mean, a lot of this fringes on the fact that like there would be a buyer of these, like the liquidated assets, which obviously is not. I mean, like. The issue with kind of Sam's position is that obviously he still has the very, very relevant fact that like he's probably still kind of anything he does, says, can look like an admission of guilt. And so like he can say things, but he also has to be wary of the fact that if he says the wrong things, it doesn't look good for him. So it's kind of similar with the Sue and Kyle stuff where like you just can't admit you're wrong. You can kind of keep pushing it out where you just pretend like you're trying to do what's best for as long as possible and just kind of hope it works, because there is not really another like option. There's no kind of apologizing to people, admitting you fucked up. Sorry, pardon my language, because then that's just jail, or I guess not jail, on seeing on how things are turning out.
Yeah, I think the Gigacup is basically like exactly what Sam mentioned on the podcast, is that I think the chance of him not being criminally charged and not seeing jail is very low unless he somehow like makes this right, and the chance of him making it right is so low. But I think he effectively has to try, or at least fake that he's trying, because that's the only way how he can show like some intent of actually fixing this.
Yeah, I don't know what the chances are that he goes to jail. I think maybe it's like 50-50. Pick a safe answer.
Yeah. I mean, you could see some of the pressure building up yesterday already, right? With the tweets, like they did kind of change the tone a bit, which was like, "Hey, you should actually come here. Like, it's quite important." I mean, maybe it is just because they were really soft with him before, and it's also hilarious.
Yeah, no, I think you're referring to Maxine Waters, where she tweeted him, "Thanks, for talking to everybody and being so, vocal and open. Can you please testify on the 13th?" And then he's like, "No, I don't think so." And she's like, "Get the fuck over here!" Like,
no. It's imperative you're here. I mean, the tone also kind of changed when Caroline was spotted in Manhattan, which is like, well, I mean, there's many places where once this type of thing occurs, you go. And the US is probably not in the first 192 countries. It's probably the 193rd one. So I imagine there's like some heat coming from that.
Yeah, I think also if the listeners want to be entertained, you should look at the hidden tweets under this tweet that we're talking about. It's literally hilarious. It's every single tweet that's claiming that she was bribed or that there was some wrongdoing from her side has been hidden by her. So it's really funny.
Oh, really?
Yeah,
that's funny. I didn't even know you could do that. Where do we go from here, Loomdart? If you think about what's happened in the market, all these players have been blown out. It's different from 2017, 2018, where all the like stupid ICO projects that no one cared about disappeared. But in this market, we saw Celsius was always a little bit weird, but Celsius is gone bankrupt. BlockFi is bankrupt. I mean, they were a $5 billion company, or at least trying to raise at that valuation at one point. FTX is gone. FTX US is gone. Alameda is gone. Genesis Capital is sort of in an uncertain position. There's just a gaping hole now. Where do we go from here?
Well, I mean, it's kind of like it took people a very long time to understand how to self-custody. There was a lot of trial and error. There was a lot of like hardware wallets coming in, failing. And I think there's a parallel to like effectively understanding kind of the hard, I guess not hardware crypto ethos, but the like kind of what crypto brings to the table in terms of transparency, in terms of being able to custody your own coins. And I mean, this was the first time where Bitcoin and crypto was kind of like, well, on this major stage. I mean, 2017, 2018 was like relatively large, but that was still fairly speculative. This time, we kind of had this ideal of like Celsius as core crypto infrastructure, BlockFi as core crypto infrastructure, and that was just like, I mean, not true. And so I think what we've had is just a very, very, very heavy meltdown. But I mean, this is like the age-old story of Bitcoin, where every time it goes up and then down, the overall IQ of the holders increases by a small margin because the people who potentially shouldn't be owning Bitcoin learn their lessons and lose their Bitcoin, and the people who like kind of, well, I guess in this case, are like the winners, the guys who self-custody, the guys who like use DeFi because they could trust most of these protocols because it's all on the chain. And so, I mean, obviously I got very heavily burnt in this too, but this is just like, it's kind of a trial by fire. And I honestly view it as being somewhat necessary because crypto is such an open and free ecosystem. So where if we don't have this type of, I guess, education by fire, it just keeps getting worse. Like, for example, if FTX didn't blow up now and they managed to like keep going, I think that hole was going to shrink. And so even though it really, really does suck, a lot of people are learning lessons. And I mean, crypto isn't going to go away. Like, people talk about how like Bitcoin is narrativeless, which is like very confusing to me because I mean, currencies are more volatile, more crazy than like ever. And it's not like Bitcoin went down, it's suddenly not doing its job. It's like, no, it's meant to be something that kind of offers itself as like an alternative. And sometimes it just doesn't have to go to zero to be like, all right, Bitcoin is still a thing. It still has value. It still has a thesis, a narrative. And so that's kind of like, I mean, a big piece of this as well is a lot of people have lost everything. And usually when you lose everything, it's kind of like you don't want this ecosystem to exist anymore because then it's a case of like, well, I believed in it. I lost everything and it's still going up. This is like unfair. This is cruel. This is evil. But I mean, crypto is crypto. Like, it's super, super messed up. But unfortunately, like, yes, some people lost all of their money. But like, the market's still going to keep growing. It seems like I'm interested to see how, like, because a lot of these VCs with high kind of cash sums, but like there's not really that much to invest in nowadays. And it's not like they can sit on the money. Well, I mean, I guess some can, but like some have their mandates.
Larry, we should leave the block and start a prime broker.
Well, I've been approached a couple of times to just start a fund now because it's a good time to start funds, right? Like if you are bullish on crypto and if you don't think that crypto will die, it's probably the best time ever to like just raise money and invest and be.
I mean, LP wise, like, who's looking to LP?
Yeah, that's a good question.
But to Loom's point, Larry, what would you invest in? What are the opportunities right now? It seems like,
well, I think the opportunities have to be like you have some long-term thesis, whether that's Ethereum or whether that's Bitcoin, and you just stick to it. Like, you basically pull off the paradigm trade, right? Like when they were buying at like 4 or 5K last cycle, effectively kind of creating the bottom and then just waiting for 2 years and seeing massive benefits. Like, here it could take longer, obviously. Like, I don't know about the timeline, but I think it's very likely that like we'll see new all-time highs, in the next 10 years. And like, as long as you're just committed to that, and as long as you stick to that, I think you can see pretty decent returns just sticking to some of the major investments. I definitely wouldn't advocate like punting some shitcoins these days or doing a lot of like kind of unclear venture investments. But some liquid vehicles could be interesting right now.
I mean, honestly, that's a really interesting point because last cycle, what do we have? We had companies putting hundreds of millions of dollars into Bitcoin miners, into stuff like Celsius, stuff like BlockFi, that in their eyes was core crypto infrastructure, which is like not true. And so suddenly, even though there's potentially a lot less kind of investing capital, there's also the case where they've kind of wisened up a bit. They're no longer going to be like just basically pumping money into things that are I don't want to say the word vaporware, but everyone's just going to be a lot more constrained. We probably won't have layer twos being as like kind of this revolutionary thing as they were initially seen as. And so it just feels like everyone's a bit more, I guess for lack of a better word, sensible. And unfortunately it took like a gigantic market collapse for people to realize that, okay, we need to be a bit more sensible. But I mean, that's never like a bad thing, because at the end of the day, there are legitimate companies around that are slowly accruing value, accruing users. Obviously there's a lot less of them, but like that's still a thing. And now it's less of an issue where they kind of, so I mean, honestly, the way I view this is a lot of these lenders were forced to lend at crazy, like basically taking billions uncollateralized, because the other lenders were raising hundreds of millions of dollars. And it's like, well, we have an obligation to our company, to our shareholders. Like we want to raise hundreds of millions of dollars too.
Yeah. And we have to offer the same competitive rates, the same schemes as our competitors, or we're going to be run out of business. Part of the downfall was the fact that there were just so many with pockets, deep pockets of money to sort of support and prop up this froth. But okay, so that raises two interesting questions for Larry. Is this more of a well, there's so many questions, but is this a VC problem? Is it that the VCs were at fault, or was it the capital markets? These capital market participants were at fault, were amateurs? Probably a mix of the both. And then the second question is, what does this mean for crypto CeFi? Is it dead? Do you think people will be more focused on building DeFi lending and trading rails? So kind of how would you delineate who's at fault? And then what does it mean in terms of like DeFi adoption?
Yeah, those are really good questions. I mean, who's at fault? It's really hard to say, right? Like, if you are a fund, if you are like, I don't know, Verify or whoever else, if you're a fund that has the obligations to deploy, and basically for 2.5 years straight, everything that you invest in immediately gets marked up 10x. And effectively, a lot of these investments were basically printing money. You would be almost, an idiot not to take these opportunities and invest in those. But I think a lot of them knew that this was, something that is not going to be sustainable. Like effectively what ended up happening is that there was so much money willing to fund these projects, but very little money willing to buy on the secondary market when these things actually hit, right? And so on the secondary market, effectively you only have the retail investors and potentially some like narrative traders, whereas generally the pre-sales, the seed rounds and the angel rounds, it was just the VCs plus some angel investors. And if you are an angel investor or VC in that environment, you generally will take it, regardless if it's shit or not, because it gives you really good value. So I think to some extent, yeah, it is a problem with just like how everything was set up, and it is a problem also how all these tokens end up trading way before you really have any sort of traction on the market. Like no one's actually trading the value of these tokens or kind of the long-term value. Mostly people are trading the narratives. They're trading all these things that are kind of difficult to measure. A lot of it is just sentiment. And therefore, it kind of always forces you into this loop of like, there's Chainlink, really hyped up for 1 year, and then we haven't heard about it for the last 2 years. And it keeps going these cycles where you have a new coin or, new small communities of people that are super passionate about something. And then when you exhaust it, you jump to another thing. And this kind of vicious cycle almost, is encouraged in crypto, and it's almost gambling versus trading. So I think both are at fault, but I think the biggest problem is that a lot of these things trade like way before there's anything real, and also the founders, the investors, they get rewarded by just investing in interesting ideas, but not in actually something that could work out. Right? That in my opinion is the biggest problem.
Wobi, one of the world's leading virtual asset exchanges, has been providing convenient and professional virtual asset services to more than 50 million users in more than 160 countries for nearly a decade. At Wobi, their mission is to make crypto accessible, building the go-to hub for the next billion crypto users. Wobi believes crypto shouldn't have any barriers to entry. Wobi is committed to asset and platform security to help you understand risks and make informed decisions to protect you and your assets. Learn more today at wobi.com. I also want to give a shout out to Ledn. Ledn, Bitcoin-backed loans and savings by Bitcoiners for Bitcoiners. As we've seen, not all digital asset lenders are created equal. Ledn prioritizes safeguarding clients' assets with its robust risk management approach. That is why Ledn doesn't actively trade or invest in DeFi yield generation strategies with its clients' assets, and only supports Bitcoin and USDC, two of the highest quality and most liquid assets in the industry. Ledn is also dedicated to transparency, which is why they are the first digital asset lending company to complete a proof of reserves attestation. Learn more about Ledn at ledn.io. Ledn, where your digital assets come to life.
I mean, I think something that, like, honestly, I kind of regret not thinking about more in depth, because it kind of was the precursor to all of this, was effectively the late 2020 Grayscale trade, which was put Bitcoin into GBTC. You can immediately mark it up 20-30% in your books because GBTC was at a crazy premium. And then you use the fact that you generated this incredible return to raise a bunch more money. And I think that kind of, in hindsight, it's pretty clear now that that is what effectively kickstarted this idea of effectively you weren't investing to capitalize on the return. You were investing to get that paper return so you could just raise more money, which was, yeah, I mean, that's kind of what started this entire cycle of just clownery.
Is this the most evil product in financial markets ever to be created?
I mean, I'm sure there's some worse, but in terms of absolute destruction of retail, managing to get a lot of traders who a lot of these GBTC guys who got really burnt on it were OGs. Sue and Kyle had been around for a while. BlockFi had been around for a while. I mean, obviously they should have known better. Grayscale to them was a free money printing machine. It's just fundamentally something that can't sustain, which is something I highlighted back in early 2021. And that was a fairly good call, but obviously we should have kept it going and been wait, maybe the damage isn't done. But it's actually something I kind of do want to briefly mention is something I saw with Luna is when Luna first launched, a lot of the guys who ended up getting burnt by it were this thing is very clearly unsustainable, it's not going to work. And they were very adamant against it for a very, very long time till it started hypermooning. And then it came a piece of well, snap, maybe I was wrong, maybe this thing is legit. And it's honestly, I've noticed this time and time again, when that starts to happen, when these core OG guys are wait, snap, maybe I was wrong about this, that's usually when the quote unquote top is in and when the chaos begins. You can't sit and tell me Sue in his incredibly cynical state would ever think that Luna was a good idea. But hey, at least the NFT guys were right.
Yeah,
everyone
the NFT guys
them.
are still they're having a blast still. They still have the VC money coming in. They're poor.
I mean,
but
I did obviously a pretty heavy pivot to NFTs last year. Unfortunately, it didn't save me from getting nuked by FTX. But I mean, it was kind of apparent that DeFi had gotten rather dirty. We were in concept, Luna was just a hyper Ponzi, and the NFT guys were getting shat on for oh, you guys are stupid, you're playing with toys, JPEGs. And I feel that I mean, if you look at art blocks, they've been doing very well recently. It's just a much more honest, pure crypto product. But yeah,
they're just sweet.
You're not
they're a little dumb, but they're sweet.
I mean, I've always had this gripe where crypto exchanges are like kind of quote unquote looking to like democratize finance, except it's just margin gambling that makes you think you're like some smart derivatives trader when you're just on like a suited up gambling casino. And like people are kind of tricked into thinking they're like smart for like effectively just gambling. And I think NFTs are like something that's honest and just, it's not like people lying to themselves that like they're professionals.
Larry, so going back to the second part of the question from before, CeFi, what does this whole market meltdown mean for the future of centralized lending and trading?
Yeah, so I think first point that like really scares me is that clearly the collapse of FTX will have implications on the regulatory environment. Like I think everyone believes that at this point. We've had all the funds that deployed a lot of capital, all the retail investors that got wrecked. Everyone is asking the same question, and that's like, if we did so many months of due diligence, how do we not find anything wrong? And I think this will be addressed by regulators. Like they will just use this as an opportunity to, create some sort of guidelines, even for international exchanges. So that could be quite limiting for sure for the future growth. That being said, we're talking about like what are some other alternatives, right? Like so DeFi was mentioned briefly. We have some like decentralized on ramps and off ramps, like just meeting up with people in person. None of these are really good enough, right? Like you're still going to need to put money in. You're still going to need to take money out. That still requires banking. That will always require CeFi and centralized exchanges. When it comes to DeFi, if you look at effectively all products that exist today, yeah, some of them are, you're still custodying your own coins. You have some slightly better guarantees of, risks, but at the same time, a lot of them are not user friendly. Like the reason why a lot of people were on FTX was because they wanted to get the, better futures experience than what you would get from something like the UIDX. They wanted to be able to off ramp really quickly and without any hassle. And I don't think we're anywhere close to these DeFi products being at the level where you cannot tell that you're using FTX, you're using DYDX, or you're using Binance versus Uniswap. Like I still think that's years and years away, unfortunately. And it also turns out that most customers, especially retail customers, like a lot of traders on Binance, they actually don't want to custody their own coins. Like they're fundamentally against it because they just don't want to have their own hardware wallet somewhere. They don't want to have the responsibility. They want to have the similar experience as with a broker dealer or a bank or something. So I'm not particularly bullish on the fact that DeFi will all of a sudden like come back and the expenses are going to be so good that it replaces centralized exchanges. I think we're probably several years away from anything getting close to the level that you're used to with centralized exchanges.
So Loom, as someone who's participated in multiple crypto cycles, how do you think a prolonged bear market will affect the community?
I mean, in terms of effect to the community, obviously, I mean, we've had a lot of people leave. We've had kind of stuff get a bit more grim. But, like, some projects that are quote unquote legitimate have, like, ample funding. They're still going to be doing what they're doing. I think what the next like kind of quote unquote narrative we will see will be something that not everyone is like basically it will be something that comes by surprise. It won't be that pre-anticipated, but that like is what it is. That's the story of crypto. We like never kind of expect the next big thing, whatever it is. But I think it's just kind of it would just be like the same old culprits, right? It's like the same old people on crypto Twitter, the people who are just like crypto because it's crypto. Like something I always like to talk about is this idea of like, so once someone's made it in crypto, obviously they like, they cash out into cash and stuff, but like these guys are crypto natives, like the Bitcoin maxis, like they don't really spend much money on stuff. To them, it's just, I mean, it's the core fundamental ethos of like, you always want your total amount of Bitcoin to go up. If that's like the total kind of cumulative amount. So if that's like the amount of Bitcoin you would own if you converted all your USD to Bitcoin, but just making as much money as possible to own as much Bitcoin as possible is kind of a core ethos, I think, that underlies a lot of the quote unquote big money guys. And I think it's something that, like, it's kind of what I referenced before, where over time, like, these guys just slowly get more and more crypto as like everyone else kind of loses theirs, gets liquidated. And so I think that, like, the music will never truly ever end, but we can have these like long periods of just kind of quietness. But I mean, that's when the fun stuff kind of gets created and thought of. When we have the like guys who are, I love the term now. I used to hate the term, but now I love the term. The guys who are in it for the tech kind of get to experiment, grow things, and they don't have this pressure of doing stuff for the sole goal of like ponzifying it and like making money instantly so you can raise a higher valuation. Everything's a lot more sensible, and like people are just a lot more rational. So I mean, it's like the age-old thing of like hard times create hard people create good times create soft people create hard times. It's just, you know, it's a never-ending cycle. But I mean, in terms of like core crypto participants, like, there are ways for them to stay around, be happy. I think honestly NFTs, again, I mean, I referenced it before, but I think I don't know, there's a few more people who fundamentally always hated them starting to like take part in the ecosystems a bit more. And I think just in terms of like growing the overall appeal of crypto to people, it's like something that helps. In terms of like, gosh, it's tough because obviously when you have a startup that is no longer viable, what you do is you close shop, right? You either return money to investors, but this is something that's like not common in crypto at all, because it's like, well, this ERC20 is not going to stop trading. This project is like still alive. And it was not an issue back in like 2014, 2015, because these weren't tokens on Ethereum. They were like their own blockchains, and your own blockchain needs miners. It needs like the blockchain to keep processing blocks. Otherwise it's fully dead. But like a lot of ERC20s, a lot of Polkadot projects, a lot of BSC projects, like they can kind of go in this like zombie state for a very long time. And I think that's part of a big chunk of like the 2021 froth was dead 2017 zombie projects that never fully died, that people started buying because it had a similar narrative to something that pumped. And so I think like a big thing we do really need to learn is kind of basically admitting when something is no longer viable and being like, hey guys, look, we know this sucks, but like this isn't really going to work anymore. And I think that's going to be tough because obviously if it's from the VC side where they recommend a project shuts down, they have to admit they were wrong. If it's from the kind of project side, it's like they have to tell their holders they were wrong. And obviously the holders would never ever want something like this because it's like, what the hell, my tokens are worthless. But yeah, I think this is kind of something that like has been like a question in my mind for a while, which is like a lot of projects obviously have died, but there's a lot of like zombies that are kind of holding some community people hostage who like could be, you know, working for like better, happier projects. Well, I say working, but like being in the community of. And I think the more people we get in like kind of happier coin communities that are like fundamentally more sound, it just makes crypto a happier place overall.
So what are your guys' outlook for 2023?
Depressing. I don't know. Like it's hard to. I tweeted this kind of jokingly like 6 months ago after Celsius collapsed, after three arrows collapsed, after Terra collapsed. I said, you know, things can't really get much worse, but they can always get worse. And I think, you know, to almost say that again, you know, I can't really imagine much worse things happening again after what happened with FTX. You know, we still have Binance, we still have Tether, we still have like USDC, but ultimately, you know, last cycle, it didn't feel this way to me. It felt like, yeah, people were kind of giving up on crypto as a concept, but we didn't have this much wreckage and this much baggage. And I think it will take some time to recover from that. I think it's very likely that, in terms of like, I don't want to speculate really about bottoms or prices, but it's likely that we're not going to see much worse. But what can really kill the markets and really kill enthusiasm is just it will kind of drag like this for some time. Liquidity will continue drying up. All the projects that have tokens, yeah, they will probably continue trading at a similar price, but there will be no liquidity whatsoever. I think the projects that launch in the last 3 months are probably already regretting it. Like you have, for example, Aptos versus Sui, and Sui still didn't launch the token, or Arbitrum, for example, and I can bet you that they're still waiting.
Like a big piece of that liquidity pie is the horror of the fact that like 2017, 2018, the market makers weren't like as exposed to the kind of downturn. Whereas now, like FTX, there's a lot of market makers who lost a lot of funds on FTX because, I mean, they're market makers. They need funds on the platform to like market make the platform. And so that is one big like difference from now to like before, is a lot of these guys who are the kind of core liquidity providers are like, I think the ones that are insolvent, like there's probably still a few more to be uncovered. It's like rough and sad in that sense, but like it's going to take time for these guys to pack up shop, understand exactly what happened, see how much money they have left. Like a lot of loans were recalled with the Luna collapse, but obviously maybe not enough, or like they were still all recalled, but it's just a case of like some people just managed to lie for long enough, like Alameda. But yeah, that's probably going to take a bit just in terms of like overall market liquidity. Like these guys need to kind of reassess the damages, see how they can continue.
Yeah.
Yeah, I'll just follow up quick on that. A couple of things I'm excited about. One, and Loom was making fun of this a bit earlier, but I still think ZK rollups are something to watch out for. I
love ZK rollups.
I know you were basically just kind of joking about them not being as big of a deal as imagined. I think that's probably true, but on the other hand, you have all these projects kind of getting to a point where it's really almost ready, and I know that's kind of an inside joke, but I do think that Q1, Q2, hopefully we'll start seeing production ready, actually scalable ZK rollups. I think Polygon will definitely transfer their sidechain to a ZK rollup. We'll have ZK Sync, Scroll, and Starknet. And I think while there probably won't be much demand to actually use those chains initially, it could provide really good infrastructure for the next cycle. And that's one thing I'm really excited about. Second one, I think a lot of the crypto infrastructure now needs to be simplified. Like I think we still didn't get to a point where someone like, I don't know, my friends or my parents that never really touched crypto before can use it really, really simply. Like the on ramps are still not perfect. The wallets are still not perfect. A lot of the core infrastructure I think still needs to be simplified to a point where you really don't have to know about using crypto if you don't want to. And I'm really bullish on this infrastructure being built out. You have Stripe now launching their crypto on ramp as well. Like I think that will really, really improve for the next cycle. And then if you have massively increased scalability with the same kind of decentralization guarantees on top of better usability and better infrastructure for beginners and users that don't necessarily want to like custody their private keys, I think there can be something really special happening in the next cycle. I think the only problem is that I don't know how long it will take. It's so kind of intertwined with macro, so intertwined with retail, disposable income, and all these things that it's really difficult to guess. But if I were to speculate, it will probably be pretty quiet for the next year and then probably start picking up again.
I think we could use some quiet time after this.
Seriously.
Leave this saga behind us.
Please.
In 2022. Well, I can't leave it behind me. Today I've been getting email after email from anonymous sources. Hi, really enjoyed your show. Listen to it on the Google Podcasts. I have a document proving that SBF was in charge of Alameda as of October to December 2021. Well, yeah, obviously. He stepped down in December of 2021. So you get a lot of false flags doing this.
I mean, it's the I heard a rumor, right? Everybody wants to be the guy that like leaks
Yeah.
something to someone because it makes them feel powerful. But yeah,
Yeah. Yeah, I think that's one thing that like has been all over the place. And also what I really don't like, and yeah, like I've been massively wrong about FTX. I think most people have been, but like all these people who are now like hindsight, I knew it was all like commingled, like the relationship was obvious. Yeah, sure, but no one really no one really even tried to predict something like this, where they actually took away customer funds and people lost money. It's so insane to me that you have these people that now claim that this was like something that could have been foreseen, or that this was obvious since day one because of how Sam interacted with media or something like that. You can find as many red flags as you could find about Sam with all the other exchange executives, in my opinion. Like there's always something, and so I really don't like that, and I really also don't like what Loom mentioned is like all these guys, effectively just anonymous Twitter accounts with no accountability, just like leaking stuff that someone sends to them, and then asking people to confirm, and
Well, yeah,
just
that's
like
like
I heard this. It's just annoying.
it. Just it completely muddies the conversation, which is what people don't understand. I had a conversation with an investor in Miami, and I like explained to him the process of like just how a story gets put together, and he had no idea. And I think a lot of people don't understand like the rigorous debates that go behind a story actually being published, kind of adding these layers of editing functions. It's a process. It's not like someone says, oh, this thing happened, and I go and hit publish on it. Like I have to have we have debates, like literal, sometimes days long debates about whether a source is reliable or not. And it's a bit of an alchemy, but part of it is there's some real science to that process, and it's a very complicated one. And I will say, like, I think crypto Twitter has been useful, and in sort of like providing a foundation for digging into some of these things. But and we use it, like we'll see some of the stuff that some of these accounts flag, but when you go to the block or one of our competitors, you're going to know that like whatever the information, like we'll be late to it, right, relative to some of these Twitter accounts, but you're going to know it's been really like refined, and it would have gone through a process, as it were. But I know we're a bit over time, but I think this is like interesting. I think both of you find, we've all been talking about this and have been in our own respective war rooms. Do you think crypto Twitter, like, do you think some of these accounts are getting ahead of their skis, or are they net positive? It's interesting, right? Because it's almost like a mob, but in some ways it's like kind of not that bad of a mob, because there are some interesting insights there.
Yeah, I mean, this is a really good question. Like, to your point, you always find about stuff first from Twitter, and in almost all the cases. Like sometimes it's private chat groups, sometimes it's like someone gives you a call and you find out, or some source or something. But a lot of the time, you just find that information from Twitter. The problem is that there's so much wrong information. Like 2 weeks ago, everyone was saying that Silvergate is going down, and because of that, Circle is going down, and because that USDC is going down, and then Tether is going down because of Deltec. And there's just like so many of these things, and ultimately, you can be wrong 8 times and be right 2 times, and you'll still be a hero because you predicted something. And I think that's the hard part that journalists have to kind of balance, and researchers as well, is that you have to be reasonably sure about stuff before you actually put it out there. And you also have some obligation to like people that follow you, especially with a large following, to do these things. And sometimes you're wrong for sure, but everyone can be speculating right now that Nexo is like insolvent, or any lender out there, because the chances that they might be, and you might be right, but ultimately like a lot of it is just guessing. And I think your larger point, is CT actually good? I would say yes, it is good. It holds people accountable a little bit more. It definitely is a good channel to get information out there as fast as possible. But for someone that maybe isn't as can confirm the information themselves, or isn't as connected, it's really difficult to be able to say Loomdart just tweeted complete bullshit versus, Loomdart just tweeted something that I should act on and withdraw from Nexo immediately or anything like that. It's really difficult to navigate this space if you're not an insider, if you don't have experience kind of knowing which accounts are reliable, which people you can trust more than others. It's really, really difficult. But overall, I would still say it's not good.
Yeah, I think I'd echo Larry's points in that, like, it's sometimes a dangerous space, but the truth of the matter is we can't get the good without the bad. And in this case, the good is like very, very good. There's no better system for getting information like immediately. And it's also like open information for everyone that everyone can comment on, everyone can like cast judgment on, like publicly, which I think is just like, honestly, I'm a big fan of Twitter. I think in terms of like social medias, it's just incredible.
Yeah, I hope Elon doesn't ruin it. Well, guys, thanks so much for taking the time. I want to thank you both for joining the Scoop today. We've been joined once again by Loomdart and Larry Cermak. Appreciate you both taking the time to be on the show.
Thanks, Frank.
My pleasure, sir.
Yeah, thank you. Thank you. The Scoop will be back for you again. Thanks for listening. Looking for more great insights from The Block? Check out The Block Research, the premier platform for research content on crypto markets and the digital asset industry. The Block Research membership includes cutting-edge reports, webinars, company maps, and more, available via our dedicated research portal. Visit theblockresearch.com to find out how to join today, or contact a member of our sales team at sales@theblockcrypto.com and let them know that Frank sent you.